And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. It's Friday, May the 27th. I'm John Hoagland. Thanks for trusting me with your time. Welcome, family, friends, futures traders, and everybody. It is Memorial Day weekend. Make sure you take some time to remember those who put their supreme sacrifice on the altar of freedom so that we can have the freedoms that we have today. It's casual Friday here at the office. Got my safari helmet on. I'm looking for some easier trades this today. It's Capital Preservation Friday. I'm going to be cautious and careful and try and make a little bit of money and start my weekend maybe a little bit early this fine Friday. We've got a lot to digest as far as economic numbers are concerned this morning. 7:30, the trade balance came out, PCE price index came out, income outlays, all really close to or right on what they were expecting. So the equity markets knee-jerking right now to the upside. So it looks like we are going to be able to break the 7-week slide in stocks this week. We're also still waiting for Michigan consumer sentiment at 9 o'clock. I got dog over here moosing me. She wants to get pet. As always, our focus is going to be on finding accurate context, always thinking about risk management first, and focusing on patience, especially on a Friday. So, being Memorial Day, there will be nothing to do here on Monday. No forecast, no recap, no nothing. Monday night will become Synthetic Sunday when I'll do most of my research for the week, and we've got a shortened week next week. So we'll just be trading what we see. It doesn't matter. I'm looking forward to getting a little bit of time off, and it'll make me excited to come back to work on Tuesday. Would you stop? Do you want to? She's moosing me. So yeah, stocks are set to break a 7-week losing streak today, facing key inflation numbers prior to the open, which everything pretty much came out as expected. Traders speculating inflation may have peaked in March, and there's some good numbers here, perhaps suggesting that might be true. We'd never know. Discounter earnings have fared very well this season. Dollar Tree and Costco beating expectations as, of course, every consumer out there is looking for bargains. So you're going to be able to find some of those in those areas. Crude prices remain at multi-week highs prior to the Memorial Day driving weekend and summer driving period here. We're right up here near March highs. Just kind of holding inside of yesterday's area of value so far this morning. We're going to see that on the charts very shortly. As always, I ask that you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome on the Market Forecast. I'm getting a little bit of love here from Lacey, she, my pretty girl. Make sure you subscribe to our YouTube channel to get notified when we do go live. Looking at the VIX this morning, down slightly at 28.17. Dollar index also down slightly at 101.69. And the yield on the 10-year continuing to slide to the downside at 2.74%. Going to say good morning, everybody. On my screen here, it says Brian's the first one in the room. Brian, you win the prize today. Marcelo, Shaw, good morning. Happy Friday. Capital Preservation Friday, absolutely. Brody, Zach, good morning. Scott saw, and he conquered. Tachyon, good morning. Federico, my good friend Vince, have a fantastic weekend yourself. We work hard here. We deserve to be good to ourselves. Theo, good morning. James Swan, Charles, James, Rick, my brother, good to see you as always. Love you. Mike, Spencer, Kevin, good to see you. Terry, Force Driven, Sarah Hall, fine morning and prayers and love to you as well. Joe, good morning. Another day in my quest to pass step 2. Just start from 0 today. Follow your process. You dance with the one you brung. Three Lions Inside, Bill Phillips, Dan Trader, good morning. Isaac, I Print Money, love that. Glitter Sandwich, my good friend John Doherty, JD, always good to see you. Looking forward to seeing you in person in a couple of weeks. Going to have a lot of fun. And David, Ron, Dan, good morning. Dan, you got such good knowledge. Just wind down a little bit, slow things down. You can get through the combine. I know you can. I'm looking forward to your success. Rob T. Dan, take some time. Absolutely. Even if you aren't back, come and visit us once in a while. I enjoyed having you on Make Coke Money. And I think you contribute a lot to this community. So keep coming around. William, Daniel, Stephen, Johnny. My goodness. How are you today? I am good. It's casual Friday. I sometimes wear the hat on Fridays. And looking forward to getting to the long weekend. Going to see if I can make a little bit of money today and call it a day. Yep, Jason, base hit, base hit, base hit. That wins ball games. Play small ball today. Dr. VJ, good morning. The Matador, good morning. And my spirit animal, the Rusty Golfer. Good to see everybody this morning. So yeah, it's Labor Day. It's Memorial Day weekend. You already mentioned, but make sure you say a prayer for those who gave their lives so that we can remain free and happy. All right, let's take a look here into the charts. Starting with the daily in the S&Ps. Let's take a look. All right. So, we did close above the weekly kickoff high yesterday. We had a nice increase in open interest on Wednesday. We lost open interest yesterday. This was kind of one of my fears. We're seeing continuation to the upside now on some pretty decent economic news this morning. We had low volume on the push to the upside yesterday. We lost open interest. It was a short covering P-shaped profile. We'll see that shortly. And I was looking at this morning as the health of this upside auction at a C+. The new information seems to have brought in possibly some new buyers, but we're not even open in regular trading hours, and we're probably not seeing our longer, stronger, bigger, stronger hands traders in this just yet. So you're going to try and stay patient. It looks like we're going to be opening with a gap, at least for now. We're going to have to see how that looks. So yesterday, I think we had a lack of new buyers. We had old shorts that were creating the upside move yesterday, and that P-shaped profile kind of says it. But again, anything can happen. ACH, these buyers can arrive anytime. We sensed them on Wednesday. We scared out some shorts yesterday. It's important that we bring in new business to the upside if this auction is going to remain healthy. Before the numbers came out today, I gave it a C+. It looks like we've got a little bit of a boost here in buyers. Want to see what happens in the regular trading hours. So here's the 30. Here's that P-shaped profile. It might be more visible for us on the TPO chart. Take a look. Did I miss it? There we go. Yesterday's profile. P shape indicates short covering, and that's supported by the loss in open interest yesterday. We had real buyers on Wednesday, short covering buyers on Thursday. Are we going to see that continuation of new buying coming in? Weekly kickoff high is where our shorts really just tried to get out of those short positions without losing too much money. We got the P shape here. We've held the weekly kickoff high overnight. We checked a naked point of control that we were all looking at in Make Hogue Money, and we're holding above there. Now it looks like we're going to be opening with a potential gap. That gap is going to be important. If this is longer, stronger buyers coming in before the open, they're not going to want to give up that gap. They're going to want to continue to push this market higher. We have last week's high right up here, and that is going to be somewhat pivotal for continuation, of course. So, new information since I wrote these notes this morning. Failure to hold weekly kickoff high here could bring us all the way back to where we saw real buyers on Wednesday. It's looking less and less like that's a probability. We're probably going to have to be monitoring to see if we can close this gap relatively early. If we can't, we go in the direction of the gap. This is very short time frame, knee-jerky reaction. We don't know what's going to happen. David McWright, the weekly kickoff levels are levels that we send out at Top Step on Sunday nights. They represent areas where we believe that longer, stronger traders are going to need to or want to adjust inventory. They're important inflection levels in longer time frame. All right. Take a look at crude oil now. I'm very interested to seeing the open here. We've got about 3 minutes to talk about the charts before we check that first minute of the open. Breakout brings okay volume, and we were talking about the 4 days that we were just really range bound. We even put a top to it and a bottom to it. Once we broke out the top, the move to the upside was on, took us above last week's high. The continuation on the breakout of range. Did it bring in some decent volume? It did a little bit of volume, but the more impressive part of it is the estimated 33,000 in open interest that were added yesterday. So this is new buyers, new bettors looking for price to continue to the upside. Obvious upside target is the March 7th high here. Happens to be my dad's birthday, and that high is 116.43. That's our weekly kickoff high here. I think this would be an easy test to go back up to that high if we do continue to see buyers coming into this market. Here's the 30-minute chart. Yet we're basically holding yesterday's area of value. We had a little push down to the downside a little while ago that I'm sure if you're active in the market, you're looking at this as, okay, this is range. If we break out below the below value, maybe that's an opportunity for us to tear into some shorts here. And I'm sure it was very tempting for early traders to do so. They are now getting smushed, if you will. And that is an industry term. So value area low supportive. Last week's high supportive. There's certainly going to be some fish here if we revisit that area. Overnight high would be pivotal, of course, to continuation to that March 7th high. Settlement is right here, 114.09. We holding any overnight inventory here? If we are, it's got to be to the shortish side. So if we got short, we were short last night, we got short in the hole here, we got to move back, coming back to settlement perhaps even before or on the open, which is in about 15 seconds. So I'm going to put the how do you spell smushed? Here's the opening range. I like a good heckling. So here we go. We've got 1378 the low, 1396 the high. We've got about 18 ticks into the opening range already. Opening range, for those that don't know, is the first minute of trade the way I look at it. Other traders, other people out there have different expectations or time frames for their opening range. So now we're expanding the opening range. If it's a minute long, we gotta let it open. And I'm not suggesting taking a trade in and around the opening range here today, because remember, we are in range and we are in value. That said, it'll probably be perfect. So we've got 67 to 96, almost a 30-point opening range. Kind of large. What's it looking like here on the 30? In range and in value. My suggestion on a preservation Friday, we're in balance from yesterday. We held our overnight. We held value low. We held last week's high. We held at the high from yesterday and the value high from yesterday. My suggestion, look for opportunities as the day goes on at these extremes. You might be able to find some fish. Good morning, Ronell. Yeah, it's value areas are so valuable, aren't they, Kevin? If you'll pardon the reiteration. Let's go take a look at the NASDAQ, which has a little bit of a higher health rating than the S&Ps did before the numbers. Here's the daily. Volume was pretty low, but we had an additional 6,300 estimated addition to the open interest yesterday in the NASDAQ, where we lost open interest in the S&Ps. Seems the NASDAQ is a day behind, and it is presenting as a weaker market. We've already looked above our weekly kickoff high, which is roughly up here at the weekly kickoff high from the NASDAQ, which is 12,700. We're already there in the S&Ps. This is a lagging market. This market has been weaker. Tech sector has been weaker. I think it's making up for some shorts that just got, some new longs, and we still have a bunch of shorts in this market, if you ask me. I'm giving this upside auction process a B- for the NASDAQ because we did have higher open interest. That's new buyers tomorrow. Will the buyers keep the pressure on? The information that came out this morning appears to keep the pressure on any shorts that are left in this market. Take a look at the 30. Maybe I'm wrong here. Now, from what I'm looking at, the NASDAQ yesterday added 6,200 in open interest, and that's an estimate. Just yesterday, April. PD, I keep wondering what you consider the difference between looking at extremes and picking tops and bottoms. Extremes, when we look at, PD, I'm just going to point this out. In crude oil, we have a range that is set. We have the low of the range here. We have the high of the range here. If I'm going to be trading the extremes, I want to buy the low and sell the high, and buy the low and sell the high, and buy the low and sell the high, and buy the low and sell the high until proven wrong. Now, we discussed this yesterday on the forecast, where the profile was very even. The market had pretty much used up most of its ability to facilitate trade in this area, and that there was probably a larger move away from this range in the cards. Didn't know what was going to happen yesterday. We left the opening range to the low of the session, I believe. But once we broke out of this area of range, we're not picking tops. We're going with that. So the range rules are basically, when we establish it that we are in a range, we fade the upper extreme, we buy the lower extreme. We sell the upper extreme, we buy the lower extreme until there's an acceptance outside of that area of balance. In that case, we go with it. And we had a pretty big open interest increase on Wednesday that said, okay, I think we're starting to get some itchy traders here that this market needs to move somewhere. And it moved yesterday. So if the market were one time framing higher yesterday throughout the session, and I started to get smart and think, well, I think the high is going to be here, and I sell it. And no, I think the high is going to be here, and I sell it. And I think the high is going to be here, and I sell it. That to me is picking tops. When we're looking at a range bound day, I look at that as structure. The market's been proving too cheap down here, and it's been proving too expensive up here. So that's more like structure instead of trying to pick a bottom or pick a top. It's an excellent question, PD. Excellent question. All right. So where were we? We were in the S&P's overnight inventory, on the NASDAQ overnight inventory. Well, we are probably a little bit long now. For some pretty decent volume on this push up here. We're opening with a gap. This is that same point of control that we reached yesterday in the S&Ps. Same day. This one here. Same point of control, same naked point of control that we got to in the S&Ps yesterday. We got another one, and we've got more to go before we reach our weekly kickoff high, which again is where I think real money is going to adjust inventory. We are coming into rollover, if you remember, in the NASDAQ and the S&Ps and the currencies. We have rolled into the August contract for gold. There is about a $6 premium in August to the June contract. All my levels have been adjusted. We're in the teeth of the rollover now, though, still. We're kind of establishing a range here. So PD, if we get up near the high of this range, it looks like sellers to me. If you get down near the low of this range, it looks like buyers to me. 1871 to the upside, 1845 to the downside. We're in rollover, so I'm expecting this market to kind of remain in short time frame control unless something major happens. Do I have a health for this market, for this auction process? I'd call it a C because it's just kind of average and hanging around. So our weekly kickoff high has been at times resistant. It's been at times support. I'm kind of beyond it now. I think it's worn out, if you will. We opened. I got a nice knee-jerk reaction here on those 720 numbers. We had a gap. We closed the gap at that time. Traded to point of control from yesterday, and we seem to be continuing this push to the upside. So our range high is all the way up here. Our range low is down here. There's a lot of visuals in short time frame. The question becomes then, which one is going to be the one that is respected? Yesterday in regular trading hours, the previous day's low was respected. The high, the previous day's area of value, was respected. After the knee jerk this morning, after the numbers, the point of control / settlement somewhat respected. The overnight low respected. How about the overnight high? Are we going to respect this? Or are we going to come back and trade to value low from 3 days ago, Monday, Tuesday? Are we going to come up and get to this visual, this naked point of control here? I guess this is Monday, Tuesday, Wednesday, Tuesday. So it's a kind of a guessing game when you're in short time frame control because it's difficult to distinguish where it's going to stop, where the visual level that short time frame traders look at. There's a lot of them, and it's hard to kind of figure out which one. So typically what I'll do in this case is I will look for the best trade location, like maybe overnight high is a good spot. If that doesn't work, then probably the point of control is a visual target that the market can get to. Maybe it's value high from Tuesday. But if you keep stabbing at it, you're going to take some small losses, because these are all levels that allow you to limit risk. Is it worth doing so in this range? Is it worth taking 5 small losses to get the one win that's going to cover all of those losses and then some? I'm looking at it like, no, I'm back burnering gold today. I am not doing it. You can't make me. Euro, remember, trade August gold today. August, volumes higher in August. Euro, 4 days in largely within range. Volume dying off. Look at this. It's coming into rollover in about a week. So we're already seeing some possible changes in volume. We added 4,000 in open interest yesterday, but we didn't really go anywhere. Giving the health an overall C here, because we're largely range bound again. So we're going to be looking for opportunities on the extremes of day time frame. Open interest for the last 4 sessions has largely just been flat. It's been up, down, up, down, up, down, up, down. 30. So I've actually put a box over where I think our extremes are. And those extremes are basically the regular trading hour high from these sessions and the regular trading hour low from these sessions. All right. So what am I looking at? In range, no open interest, no overnight inventory, I should say. Price central in the kind of balance, a little to the high side. Stay patient. Look at where the market opened. It opened right in value from yesterday. We closed the gap. We traded higher overnight. We rejected. We're in the middle of the range, middle of value from yesterday. Again, almost a back burner type situation for me, unless I get an opportunity to trade the extremes, the outer extremes of this area of balance. It's the place that I think you are going to find the biggest fish. It's the place where I can lose the fewest worms. And the last thing I want to, I can lose a worm. I don't want to lose my rod and reel. So I'm going to focus on these extremes today if I do anything in this market. So today is also switch day. I'm in September. 10 year now, September. We're already talking about September. We're hardly in summer and we're in September already. 12 tick discount to the March contract. All my levels have been adjusted. Teeth of the roll. Lost 30,000 in open interest, but that's not really readable or reliable in rollover. 30-minute. Rollover range. Here we are, range bound again. Highs up here, lows down here. Basically holding last week's high really nicely on the lows. So if I'm going to fish, I'm going to probably be fishing at the upper extreme here. If I'm going to fish here, I'm going to fish at the lower extreme. I'll let them take a couple of worms, not taking the rod and reel. Again, because it's in rollover, this is largely backburnered for me. If I was an active 10-year trader, I don't think that I would be all that excited about the current situation and about the current opportunities. Speaking of situations, look at this nat gas. Wow. Sellers have really worked hard to protect this $99 level. Boy, did they work hard at that. Open interest, we added 3,700 in open interest on a down day yesterday. There's a little bit of a warning sign. We've got just pin bars up here. We've got long shadows, lots of rejection, lots of effort to keep this market below nine bucks. Settlement yesterday was 889 and a half. And now we're just really seeing this market start to fall apart. Before the open today, I gave this market a D for its health on the upside auction. Now, looks like it's a flat F. We got rejection, open interest addition, can't trade above settlement, late spike, opening below the late spike, and with a gap. Look out below. Look out below. Here's our last bull flag. This trend line here might actually be something we would want to keep an eye on, but we're already through all the naked points of control to down below $8. This market is freewheeling right now. Tough market. Almost a head and shoulders we've got here. A little reversal pattern. Yep. Tweezer. Yep. And if you're long, up here, you're like a piece of rice stuck between two chopsticks. And hurting right now. Yeesh. Glad that's not me. That market is vicious. Right. Okay. It's about 14 minutes to the equity open. It's been a long week. Hopefully a profitable week. Hopefully a week that we've learned something. I find things to learn in these markets for every day for 30 years. There's something always more to learn. And when you get the right answer, the markets change the questions. One of the things I love about it, one of the things that it keeps me coming. If I was an avid golfer, and I have been at times, the 3 or 4 good swings and good hits in 18 holes that I would actually be able to accomplish was always enough to keep me coming back the next time. All right, so let's take our deep breath. Remember those that gave their lives for our freedom this weekend. Have a wonderful weekend. Have a barbecue. Have a nap. Have a margarita. Just have some fun. We work hard at this. We deserve it. Don't forget to say another prayer for world peace. It's a sad state that the world seems to be in, but if we all pray, we can make it better. Other than that, get out there and profit today. Follow your process. If you're close to getting through that trading combine, stay calm. Think about starting from zero. Follow your process, and you will get there. I do miss being on the trading floor, absolutely. So trade well, everyone. Have a great weekend again. Be good to yourself. Be good to others. Be kind. Say a prayer for peace. And I look forward to seeing you on Tuesday. Nothing happening here on Mondays. Tuesday we will start with market forecast and make home money. I'll look forward to seeing you then. Protect that profit. Get out there and trade well today, and I'll see you on Tuesday. Blessings.